Good afternoon. Hello, hello. Thank you all for joining us. How is everyone doing? If you can hear me, leave me a message, let me know. How you are doing today? Thank you all for attending. Many of you joined quite early, so good to see. Hey Ali, how you doing? Thank you. Hey Tobo. So you hear me okay? You see my screen? We have the IronFX session today with the straight away side with on my view on gold. I will get to that. Just give me a moment. We're doing a webinar series on live trading analysis today, so we'll be getting through that. I'll give it a minute or two before we get started. Hey Zaya, how are you doing? Zia? Fantastic. What I usually like to do, or what I like to do is, if you can, let me know where are you joining me from. I love to find out, how far reaching we are getting, and see where's everyone joining us from. So, let me know, where are you joining us from? Pakistan. Brilliant, brilliant. Wow. Pretty much all around the world we have. Good to have you guys. So again, thank you all for joining me on this session today. We are doing the webinar series where I'll be guiding you through some live trading analysis. I'll be sharing with you my views, my thoughts, my opinions of what could happen or what is happening in the markets. This session is being recorded, so the recording will be available. I think it'll be uploaded into the YouTube channel, so check that out. If not, do reach back and I'm sure we'll find out a way to get the recordings out to you guys. So as usual, before we get into any sessions, a quick disclaimer is that the information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only, right? This material is just a personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of this material is strictly prohibited. What it means is that I will be looking at some trades, I will be looking at charts, looking at the news, giving you my views, my opinions. If you do jump into any trades, please make sure you do your own due diligence. Make sure you manage your risk, trade size, leverage. Don't jump in too many trades. Do your due diligence before you get into any trades, right? And the way this session works very well is that if you have any questions, please feel free to put it into the chat. I know you're still telling me where you're coming from. Fantastic. I love seeing that. If you have any questions, put it into the chat. I'm happy to answer your questions there, trading related questions. And then, if you have any requests on pairs to look at or instruments to look at, I'll be happy to do that as well. I do note that we had one quick early request on gold, so that'll be the first one I get into with this session. So with the disclaimer done, and we know how we're going to run this session. Okay, quick thank you all for joining us on this session. Let's get started. How I approach the markets, or how I like to approach the markets, is first things I always check out the news, right? I always look at the fundamentals. I see where the market is heading in terms of the news. Then after that, I pair it together with the charts to tell me what could happen, where could prices be moving. All right, so how I get my news events, I look at Forex Factory. Can you all see my Forex Factory news schedule? Yes or no? Quick one. So for everyone joining us, please let me know if you have any questions, requests. I'll be happy to go through that. Great, thanks for that, Sippo. So what happened last night, right? Anyone can tell me what happened? What was the big news that happened last night that caused a lot of volatility? That was a big news. Huge volatility happened at about 8 p.m. GMT plus 8. Anyone with an idea of what happened last night? Just want to see if you guys pay attention to the news. CPI, thanks for that, Howard. Yes, it is. So looking at yesterday at 8:30 p.m. GMT plus 8, we saw US CPI data being released. What it showed was on a month-to-month CPI data did not, or CPI or inflation, CPI is inflation, did not increase, right? They were looking at, it was 1.3, increasing by 1.3. They were expecting a slow growth at 0.2%, but it came out at a 0%. So what it meant was that US CPI went from a 9.1 year-on-year to an 8.5% year-on-year. That slowdown, this slowdown in growth of CPI or growth in inflation actually led to the dollar weakening. So the question there was, can I ask why it made the dollar weaker? What actually happened was, as the CPI growth slows down, right? As inflation growth slows down, the likelihood of the Federal Reserve, the US Federal Reserve, taking on a more aggressive stance by increasing rates more aggressively in terms of a 75 basis point or a 100 basis points gets lower. The chance of that is lower because, hey, they have been increasing rates. We haven't seen that impact. But now, with this recent data, we're seeing the impact or some impact of that rate increase causing inflation to slow down. So because of that, markets are anticipating that we might have seen a topping off of the inflation. And that's why, they're anticipating Fed Reserve might not increase rates at 75% or 75 basis points. They'll probably look at increasing rates at 50 basis points. So that's one reason, or the main reason, why we saw the dollar weaken on release of the news, and weaken quite significantly, right? So I'll show you here with the dollar. What happened was it shot all the way down towards that 104 level, bounced back up, and is right now trading at that 105 level, 105 round number. Right, so I'll take these lines away just to clean it up a little bit. This was some analysis I did before. Right, so the DXY, the dollar index, on release of the news, dropped strongly, straight line down, hit that 104.75 level, and then bounce back up again. So at this level now, at just below that 105 level, we're possibly anticipating some dollar weakness or further dollar weakness to come into the consideration. All right. I hope I answered your question there, Howard. So, let me know if it's all good. With that, like I promised, first ones we're going to look at is gold. So I'm sure you all know that gold has that inverse relationship with the dollar. Typically, what happens is when the dollar drops, we should see gold climbing up, right? And if we see dollar climbing up, we should see gold going down. But what we actually saw last night was that gold went up, hit that, take that away, right? So it didn't break above that the 1800 level. It went up, touched that 1807 level before turning back down again, right? So it touched that 1807 level before turning back down again. Right now, gold trading at about that almost 1790 range or resistance level. just slightly below that 1790 level. Why did gold drop instead of going up? Like Abid said, gold initially fly, but later fell. So why do you think gold fell? Anyone with a idea or thought or consideration of why did gold fall? Despite the dollar index dropping, we saw gold dropping as well. Anyone have a quick answer there? Dollar weak. Well, dollar weakness typically should bring gold up, but yet we saw it drop. All right. So one reason why this happened, or one reason why this possibly manipulation, not quite, I think, is I would say that markets viewed that, hey, if the US were less likely, or the Fed Reserve was less likely to increase rates or increase rates more aggressively, right? They're less likely to increase rates more aggressively. That could help the US economy avoid a recession. That could help the US economy avoid entering into a recession. And if the US avoids entering into a recession, the US economy entering into a recession, that could also help the rest of the world avoid entering into a recession because of the US. All right, so straight away, everyone's viewing it as a little bit safer, less flow or less need for a reserve or a safe haven commodity. That's why we saw the sellers starting to sell, right? And also because it hit that key resistance level, and then we saw it turning towards the downside. So two things here. One, less or a lower chance of markets viewing a lower chance of a recession, a US recession and a global recession, causing that slight sell-off. And two, price hit that 1800 and 1807 level, key resistance level. We saw some sellers coming into the fray, and that's why we saw that quick sell down. But bear in mind, as I zoom out here, you can see that it is still in that upward channel. It did break slightly below, but it is still in the upward channel. So I'm anticipating now for gold to actually push back up into this range, right? For me, my view is that I think gold is likely to push back up into this range, possibly test that 1807 level again. 1807 is a crucial level, because you can see that last time it came to this point in around the 14th, 15th of June, hit this level and bounced back up, came within this area and broke towards the downside. So it's a good resistance and a support level, right? Or a support turned a resistance level. Now what I'm looking for is for gold to push towards the upside. Syed asks, I'm in buying gold. What do you say, is a good or bad decision? It's hard to tell you exactly whether it's a good or bad decision. Not knowing how much you're buying, the kind of leverage or margins that you are looking at, or even what kind of time frames you're looking to hold on to it for. My view, again, I think that for gold, we're going to see that climb and hit that 1807 level. If it breaks above this resistance level, then we're going to see a stronger upside trade, right? M30 time frame, a short trade. I would say that if we're looking at M30, I'll show you on H1 time frame, right? I think that would be reasonable. I wouldn't have got into a buying opportunity straight away. I would have waited for it to break into that channel before I would look to buy. So you might be a little bit early. My view is that you might be a little bit early, but I think is that if this continues towards upside, especially if it breaks above that near-term level of about 1792, or to refine it, about 1793. We could see it come into the channel. We could see a more sustained move towards the upside. All right. So I hope I'm helping you there, Syed, but watch out for this 1793 level. We could see price turn back down, but it looks like momentum is pushing it towards upside. Right now, why is it pushing up? Because of that dollar index. Dollar is dropping towards the downside. So the inverse relationship has come back into play following that news shock that we saw, right? So that news shock we saw, after that, now we're seeing that inverse relationship come back into play again between gold and the dollar. All right. So far, so good. Everyone helpful, good information. With that, let's look into some currency pairs. If you haven't already, please let me know what other pairs you would like me to check it out or do some analysis on. If not, I'll go through some of my favorites. The Aussie dollar, right? So this was the analysis I anticipated for the before the news. I was looking for it to come up, hit that 0.7 level or 0.70 level and turn down. It didn't happen, right? So I'll go back to the H4 time frame. I'll take that away. What's really interesting here for the Aussie dollar is that it has reached, or it came towards that. Let me move this away. It came towards that 0.71 level, right? It's hit 0.71, seems to be struggling to break towards the upside. If that resistance hold, what we could see is a push down towards 0.7050. So watch out for the Aussie dollar. Upside potential is there, but I will be a bit cautious. No big reason why, apart from the dollar index weakening, no big reason why the Aussie should be pushing too strongly to the upside. And if I zoom out or I go to the daily time frame, you notice that the next key resistance level, major key resistance level, is that 0.7260 level, right? Last time it hit was in June, and also when it came close in May. So if it does break above that 0.71 level, we could see the Aussie push towards 7260. All right. So my view is that we're likely to see it push, come test that 71 level again, maybe break it a little bit towards the upside, but eventually I think we're going to see that track back down, test back lower again. So just be extra careful if you're looking to buy, if you think that the Aussie is going to have a sustained move towards the upside. Other reason why I'm a little bit cautious about telling you that we're going to see a sustained move towards the upside is when we look back into the news, you can see that we have the US PPI number to be released today, right? PPI is Producer Price Index. And we're looking at, again, that slowdown. We might see that dollar weakness come back in slightly, but, I think that we might see a quick rebound again on the dollar. Don't think you'll get too weak over a long period of time. Into tomorrow, we do have the pound GDP numbers to be released. GDP looking to go, for the UK, looking to go from a 0.5 to a minus 1.2%. Preliminary GDP quarter on quarter looking to go from a 0.8 to a minus 0.2. So despite the pound dollar climbing quite strongly, it doesn't look like it's going to be good news for the UK in terms of GDP. We might see a contraction in the economic activity. So we might see some limited upside move on the pound dollar, possibly pushing it lower. All right. So let's go back into the charts. Got a request for the dollar yen. All right. So dollar yen was one of the trades that I did yesterday. As it broke below that 134.60 level, I was looking to sell it down. I sold it down towards that 132 level and got out, right? Price right now trading at 132.58. I think we're going to see the dollar yen sit in consolidation at this point, right? So I think we're going to see it bounce around this level. Take that away. We're going to see it bounce around this level. I'm looking to see if we're going to see that dollar strength come back into play. If the dollar strength comes back into play, then I would consider buying the dollar yen up at about 133.30, about 120 pips towards the upside. Stop loss at about 60 to 70 pips below that resistance or below that support level. A 1:2 risk reward ratio towards the upside for the dollar yen. And on the flip side, get a bit of flexibility on the dollar yen with the way the dollar index is moving. If it breaks towards the downside, then you can look to sell down below 132.50. So about 132.40, right? Below 132.40. Again, stop loss at about 70 pips. The next key support level is at 130.75. So it's about 140 pips towards the downside. Again, 149 pips towards the downside is a 1:2 risk reward ratio on the dollar yen. So both upside and downside potential for the dollar yen, both with a 1:2 risk reward ratio. What you need to do is be extra patient, wait for price to either break towards the downside or bounce back up, break above that current resistance level towards the upside. Okay, so be a bit flexible there for this trade. How to identify liquidity? There's no true identification of liquidity. Liquidity, what you tend to, one of the best ways to look at it is to look at the market as whole, right? Don't just look at one pair or one pair. Look at it as a whole. What I mean by that is, if you look at the dollar yen and you see it sitting across and you think that it might be a little bit quiet, a little bit illiquid, then you want to check. You want to check like the euro yen, see what's happening. You want to check the pound yen to see whether it's moving or not. Check across different related pairs to see what's happening, whether it's going to move or whether it's moving or not, to identify that liquidity. All right. So I hope I answered your question there, Zeishan. All right. I saw a NAS 100 there, but let's look at the pound dollar first. All right. So why I'm looking at the pound dollar first is because with pardon me, hang on a second. With the GDP number to be released tomorrow for the UK, you can see that the pound, if I just did that, doesn't make so much sense. I'll take that away. You can see that the pound dollar traded higher, didn't like that 1.23, almost 1.23 level, went back down. Again, tried to go higher, came very close to that 1.23 level, by retrace back down. Right now, retracing a little bit lower again. So bear in mind, tomorrow, 2 p.m. GMT +8, we do have the UK GDP. Looks like it's going to be bad news. If it does come out at a -1.2 or more, I think that it might be even a greater than -1.2, so maybe -1.5. Preliminary GDP possibly at a -0.3, 0.4, 0.5. What we could see is the pound dollar trading significantly lower. Negative GDP signals a contraction in the economy. You can see that pushing towards the downside. What I would be looking for is to see if price can break below that 1.2150 level. So I'll put in that line there. So about where it first started, that upward move, right? So we see pound in that range. If price can come down, break below that 1.2150 level, we could see further downside, possibly towards that 1.20 support level. So in this case, what I'm just to show you what I'm looking for, it's about a selling opportunity tomorrow, about there. Stop loss, about a 30 to 40 pip stop loss, 40 pip stop loss there. Take profit towards the downside. I wouldn't go all the way to 120. I would say at about 100, about 100 there will be a 1:2, almost 1:3 risk reward ratio towards the downside. Why does stop loss always hit? Okay, simple. There are many reasons why stop loss shouldn't always hit. For me, if my trade hits a stop loss, I'm actually quite happy, because what it means is that my trade was wrong. I would have hit my stop loss. It would have gone right against my trade. So in that case, an example here would be if price came down, triggered my trade, and then it shot back up, hit my stop loss, most likely it would have continued towards the upside, right? Very seldom does my trade go hit the stop loss and then turn back down again. So many reasons why a trade would have hit a stop loss. It could really well be where you put your stop loss. For me, I approach it in the sense that I always have my stop loss above a key resistance level. You put it above a resistance level, price, what could happen on price is that it would come down, trigger my trade. Even if it does bounce, it will hit that resistance, turn back down, hit that resistance, turn back down. And by then I would either have decided to close off my trade, or it would have gone down because it rejected that resistance that many times it would have gone down and hit that take profit, or come close and have closed off the trade. So just pay a bit of attention to where you have your stop loss levels. Should be either above a resistance or below a support level. Have those levels protecting your stop loss there. All right, so I hope that helps you, Sipo, with your stop loss levels. If I found a POI, I think you mean, what does POI stand for again, Zeshan? Just so that I'm clear. In H1, when price comes to my point of interest, when it comes to my POI, then what confirmation and what time frame used to jump in? All right. So the way I look at my charts, or the way I look into a trade, is first I look into the news. Right? I look into the news. I think about where I think, for example, in terms of the pound dollar here, I'll be planning for tomorrow's trade. I already look at it, go, okay, news. If it's a bad news, we're going to see pound dollar drop, right? Then I have my support levels, my next support levels, and then all I do is I wait for price to move down towards that point before it gets into that trade. So I don't consider too much other factors. I try and keep it a little bit simple, just based on the overall expected direction, then support, resistance, price levels for it to move towards the downside, trigger my trade to get in. All right. One other thing to consider is that block order. Yeah. All right. So one other thing to consider is that when you enter the trade, whether you're putting in a pending order, right? You're putting a market or instant execution or a pending order. You want to make sure that you know why you're entering a trade. So sometimes I feel that traders would put a pending order at a level, you see price spike, hit that level, reverse straight back down, it gets stopped out again. So I tend to do market executions. I like to wait, see what happens, before I jump into a trade. Very seldom do I let the market jump into a trade for me. All right. I hope I answered your question there, Zayshan. So that's the pound dollar. Looking at the euro dollar here, broke above. Euro dollar did very well last night, right? Euro dollar did very well. It shot up. Fantastic. Good on that. It shot up above that 1.03 resistance level. Key resistance level there. It's held strongly there. One time, it came very close in these levels here. Once it broke below, we saw it. Since July, it stayed under that 1.03 level. But last night, it broke towards the upside. So what could happen here on the euro dollar, if I zoomed out further, you can see that when it came to about that 1.305455 level, we saw that push towards the upside. Okay, so what I'll do is I'll put in the additional line about there just to show you what happened here back in May, what happened here in June, where it hit and bounced off, again in July, where it hit and bounced off, and most recently last night, where it hit and turned back down. I wouldn't do anything on the euro dollar at this point unless price can break above that resistance level there, 1.0370. If it breaks above, we can see we're likely to see further upside on the euro dollar. But if it rejects, we're going to see that downward move. Preference, what I'll prefer to see is for the downside, right? Why? It's because we can see the euro dollar has been trading lower, pushing lower, kind of follows the long-term trend if it hits and rejects. So I'll be more interested to see price go up, hit that level, and turn back down. Then I'll be looking for, same thing again, selling opportunity. Oops, let me move that away. Tight stop loss. This one will be quite tight at about 30 pips. Take profit at about, let me just change this a little bit. Bring that down so it's easier to see. Okay, so take profit at about that 40. You're looking at almost a 1:1 risk reward ratio towards the downside, or 1.5. Then if it breaks lower again, you can see that move back down again. So I want to see that first test and reject for a downward move. And then if it continues lower, then again, another break of that support. Stop loss again, about 30 pips, take profit about almost 90 pips, a 1:2.5 towards the downside for the euro dollar. So you can either, so for those of you who are a little bit more risk adverse, right, who are a little bit more risk adverse, you might not take that first trade. You might say, hey, I'll wait out. I won't enter there. I'll wait for it to test, reject, break below that next support level before entering a trade. Those of you who are a little bit more aggressive could look for a test and reject. First trade towards the downside, could drag it all the way down, or could get out and then enter another trade down again. All right, hey Theo, I did gold already, but just a quick recap for everyone who's just joined us. Gold right now trading at that 1791 level, looking for it to break above 1793 before we can anticipate further upside into that 1807 level, as that relationship between gold, or the inverse relationship between gold and the dollar, comes back into play. All right, so that's the Cliff Notes version. This is recorded. You can check out more analysis or the previous analysis when it's being uploaded onto YouTube. Looking at the Kiwi dollar, same thing, Kiwi dollar performing the same as, almost the same as the, you're most welcome there, Theo. You know, Kiwi dollar moving almost the same as the Aussie dollar. I feel that it does look like it's topping out, struggling to break towards the upside. Downside move is anticipated. I'm anticipating the downside move. Let me just see. Where's my analysis from before? Yeah, there you go. All right, I was looking at that pattern towards the downside. We're looking at a possible H4. How do I draw this? A bit of a double top pattern there with that near-term resistance of 0.6430 or 0.6420 level. So I'm looking at a formation of a bit of a small double top, possible push towards the downside on the Kiwi dollar. Only thing here is that for this push to happen, for this move to happen towards the downside, would be highly dependent on the dollar index recovering. Right? It would be highly dependent on the dollar index recovering. Could happen, but I think chances of it might be a little bit low or a little bit weak. What I'd rather be looking for is if we're going to see any other news coming from the New Zealand side, or any negative news coming from the New Zealand side to possibly push the Kiwi dollar towards the downside. Right? So not ready to sell yet. Not ready to sell yet. I would say wait it out. Wouldn't be too late even if you got in below 0.6386 or 0.6380. Could do a short-term trade at about 0.63, below 0.6380. Stop loss about 20 pips, take profit about towards the next key level there, about 40 to 50 pips, or 1:2 risk reward ratio towards the downside. Right? You can, and I like, this was a previous one that I did, that head and shoulder pattern. We saw that downward move towards the 6220 level before that big bounce up again. There's one more I was looking at, I was going to share with you guys, was this one. Right? So this move, upward move, didn't happen because of that dollar weakness. But look, I have to show you this on a daily time frame. You can see that the the US Swiss franc had that double top and then a big downward move right now at that 0.94 level. Right, this 0.94 level is a very key level. Why? It's because the last time it got to this point, it hit and rejected was on the 16th of March this year. Right, we saw price, I'll put this level here, we saw price come up, hit, and then turn back down again. Right, I'll zoom in for you. We saw price hit and turn down, and then when it finally broke up from this level, it went strongly towards the upside. Right now, it's approaching this price level again. If we do see the US Swiss franc break below this 0.94, we could see significant downside on the US Swiss franc. Right? Where could it get to? Next immediate level would be at about 9225. Right? 9225. You could be looking for that move either on the daily time frame or on H4. Right? Daily, you would have to, I would always wait for the candle to close. I'll wait for this daily candle to close. If it closes below 0.94, then I will look for that trade, short trade towards the downside. About 50 pip stop loss, about 130 pips take profit level, a 1:2.5 risk reward ratio on the US Swiss franc if it breaks below that 0.94 support level. Make sense so far? If it makes sense, please let me know. You've all gone a little bit quiet. Super. Thanks for that, Thobo and Theo. All right, Zayshan, with a question, how do I identify a fake breakout? All right, so let me just bring that back. Following gradually. Good stuff, right? If you have any questions, please let me know. How do you identify a fake breakout? What I do, one of the ways that I kind of protect against a fake breakout is that I don't consider support or resistance lines as, or support and resistance levels as a line, right? I would look at this as an whole area. So for example, this point, I would consider this 0.9470 all the way to about 0.9496 or 0.94, even 0.95, right? So I'll consider this whole thing as a support level, and I'll wait for price to break out of it, close out of it, before I would consider as that price has broken that level, right? So what you notice is also that if you've been following my analysis, I do give you a range of prices. I don't give you a specific level because I consider this as an area. So only when it breaks out of that area, not when it closes out of the area, before I consider a move towards the upside, not just the tail and not just one price level. So I find that as a good way to reduce the possibility of a fake break, right? So for example, again, at this point, I would consider this whole area here between 9605 to 9626 as a resistance area. Only if it breaks out of this area, I would say it's moved up. If it breaks down, then I would say downside potential. All right, I hope I answered. Hope that makes sense to you, Zayshan. Okay, one more that I liked, or I had a good trade. Over how long? Just I will always do my lines. I'll do my support or resistance lines on a H4 time frame. I would, depends on how long you tend to hold on to your trades for. Typically, what I find is that for most retail traders, you hold on to trades for about within a week, you get out of your trade. So I would say that your lines or your levels should be the most relevant levels. So it should be about maybe a month period, right? 4 weeks, 4 to 6 weeks kind of period. So for example, you know, and it depends on relevance as well. So for example, here on the US CAD, you know, previously I had a key level here at that 1.28 level, right? So in terms of an area, it would be about from 1.2784 all the way towards 1.2, about 1.28 there. I'll consider this whole area as a support. But now, given that price has broken that level, I might actually, or what you could actually do is revise this and consider that point as a support level. All right, so you consider that whole level between 1.2760 and 1.2784 as a support level. If it breaks lower, we'll find downside. If it bounces towards upside, I would even say that it needs to go to about that point 2790. If it breaks up, then we'll see further upside. So I would always be, every time you trade, you want to check your charts, check your lines, check your areas, just to make sure that price is relevant. It's not something that you set once and forget, right? It's always something that you adjust. For short-term day traders, I would say, you know, still do it on the H4, still do it on the H4 time frame. But then once you get back into the H1, then you might have some interim levels. I'll take this away just to clarify. Right, then you might have some interim levels. For example, at this point, you might put it there. You might actually change it and make it a dotted line, just so that you know it's an interim level, right? So in this case, how I apply it is I would be looking for the US CAD to trade higher. If it breaks above that 1.2790 level, then I'll be looking for that upside move, right? I'll look for it to move towards that 1.29 level. But what it means is that at about that point there, I would make a consideration. I would be thinking, is price going to break above this level, or is it going to turn back down? Depending on the way price moves and the price action at that level, I would decide in terms of an intraday short-term trade, am I going to hold on to it, or am I going to close it off? So that's how I would use interim support levels or interim resistance levels. Very good questions there, everyone. Super happy you're asking this kind of questions. I hope that the information I'm sharing is going to help you with your trades as well. Oh, someone did ask about NAS 100. It hasn't done too much. It did break above that resistance, but I think it's going to come back down to test that 1336 or 13362 level. I think we're going to see that do something similar to test back in before. I think it's going to sit in consolidation. I think we're going to see it sit in this range, test a little bit lower, bouncing back up. No real direction, unless we're going to see some clearer moves on the dollar index. So just hold off on it. Don't rush into a trade. They're mostly in consolidation with a few spikes. So just be careful with that, right? I think that this range is still going to hold quite strongly. All right, cool. Euro pound for sure. I like Euro pound. All right, so take that away. Oh, that's on H4. Okay, so Euro pound on the H4 time frame here. Right now, trading at 8470. Right. Again, remember when you're trading the Euro pound, a few things to consider. What's the Euro dollar doing? What's the pound dollar doing? So why is this pushing towards the upside? As again, we catch back onto the Euro dollar. It has been pushing higher. The last 4 hours has been pushing higher, a small retrace there. Pound dollar looks like it's pushing towards the downside. So as the pound dollar drops, we're going to see Euro pound go up. As the Euro dollar goes up, we're going to see the Euro pound go up. So that's why we've actually seen the Euro pound push towards the upside. What to look out for here is if the pound dollar is going to continue dropping, right, to push the Euro pound up, or if the Euro dollar is going to keep going up. We do anticipate, or we're looking at it pushing a little bit higher before turning back down. So I would say a key level here would be about that round number of 0.85. Right, put that there. So 0.85, like you were asking before, how do I prevent a fake breakout? I'll consider 0.85 and also about that 0.8482 level. So I think price is likely to come into this range, right? Still wouldn't do anything yet unless it breaks towards the upside. Then I would look to buy it up towards the 8565 level. Or if we're going to see the Euro dollar dropping, if it climbs up, hits that resistance levels and turns back down, then we're going to see this push up and then turn back down again. So again, all dependent on what the euro dollar and the pound dollar is going to do. What you're going to do, what you could be looking for is if it breaks above 0.85, then we could be looking at buying opportunities, take profit about 50 pips, stop loss tight at about 30 pips, almost a 1:2 risk-reward ratio towards the upside. If it rejects that resistance level, then selling opportunity. Below, I'll be a bit safer here and say below 8460, stop loss about a 40 pip, take profit maximum at about 80 pips, almost a 1:2 risk-reward ratio towards the downside. But like Tobo was asking before, I think interim level would be at about that 8414 level, where I'll be thinking, hey, if I got into this trade towards the downside, I'll be deciding at this level whether to close out the trade, or is price action showing me the strength to push it towards the downside. Okay, so again, a bit of flexibility there on a euro pound, because it is going to be highly dependent on the way the euro dollar moves and the way the pound dollar moves. And in this case, I think that, like we were just talking about, euro dollar finding a bit of an upside, limited upside there, pound dollar possible downside with the GDP in mind for tomorrow. We could see a bit more of a volatile move on the euro pound, especially, you know, tomorrow's GDP number could bring the pound dollar down. We could see the euro pound shoot quite strongly towards the upside. Might be offset by the euro dollar dropping as well. All right, so just be extra careful there on the euro pound. And Hassan asked, lucky last pair we shall look at, pound Aussie. Okay, pound Aussie. I'll take that fib level away first. Ooh, okay. So pound Aussie broke below that level of 1.7232, right? It broke below that level of 1.7232, looking like further downside. We're seeing that downward move. How do I put this in? You're seeing a bit of a downward trend line as well, capping or preventing the upward move. So as this drops, you know, and I think that it's going to continue dropping, what's the next support level? We have to look for that. Moving to the daily time frame, very far away. Okay, so you can see that if I drag this line right across, you can see that this 1.720 or 1.72 level, very strong level. If it does break, then we could see the next downside at about, let me just zoom in a bit. Next downside at about 1.6723. So significant downside if it does break lower. What it means is that, back to the H4, looking at the current, I wouldn't trade it all the way down. I don't think it'll move all the way down in a straight line. If wick on H4, and this week would be a candle in H1, but bullish, can we consider rejection or not? No, I wouldn't consider rejection just based on the wick. I would say look for a couple of other candle formations to show you a clearer rejection. So I want to see a wick plus the candle closing strongly towards the upside before we think of it as a rejection. When looking for previous support or resistance, how far back is relevant? As far back as required, right? So in this case, with the pound Aussie, you know, we haven't found any levels breaking below this point all the way till October 2017. So I still just want a level there as a bit of a reference point. right? Because it's going to be impossible to trade without reference points. So having this as a reference point, I'm going to say, okay, if price does close H4 below this 1.72 level, could we be looking to sell it down? Yes, because it is following trend, it's pushing towards the downside. The Aussie is gaining strength, the pound dollar is weakening a little bit. It all seems to line up. I would say below 1.7165, stop loss about 50, 60 pips, 60 pips there, take profit, 120 or 150 pips towards the downside, or 1:2, almost 1:2.5 towards the downside for the Aussie, for the pound Aussie dollar. Again, this level, we do know that this level is a level from back in 2017, but it is just a reference point because we don't want to be setting a take profit, at that point, which is still a reference point from very far back. So I would say, okay, look to trade it down 1:2.5 towards the downside, possibly take profit. Possibly wouldn't hit take profit, but anywhere in between, you could be looking to close out that trade, dependent, check back on what's happening on the Aussie dollar, check back on what's happening on the pound dollar as well. All right, so I hope I answered your question there, Stephen. And Hassan as well on the pound Aussie dollar. Not ready yet. I think this needs to close before it before we can see a confirmation of that downside. Close below that support and towards that entry price. All righty. So with that, I will draw to a close of the session. How did you find the session? Please let me know. If you thought, if it was good information, helpful, please let me know. And if you liked it, I hope to see you all at the next sessions coming up, where we can be going through more trade analysis, guiding you through your trades and helping you with your trading journey. Fantastic. Thank you all. With that, make sure you trade well, trade safe, and I'll see you again. Bye-bye now. Take care. Thanks, Tobo. See ya. Bye-bye.